Yeah, so for this series, those in the community might know. It might still be new to you, but just for everyone's sake, Reactive Markets today is sort of like episode 2, but really we invite someone from the space, the market, investors, VCs, etc., or they're in blockchain in general. But they don't necessarily have to be in blockchain. But we invite these experts to come in and just have a good chat about the space in general, technology, about the market, about, I think, the wider situation, because I think crypto has reached a stage where we can't really go it alone now. We are always affected by what's going on outside. So with that, today we have Tao Tao here with us today. He is the founder of Up VC, and I'll share just a little bit about him, and perhaps after that I'll invite Tao Tao. Perhaps you can share more about your background as well. So Tao Tao here has been a good friend of me for I think about 5 years now. Time flies very quickly, but I knew him when I was in London, and we were angel investors in a certain event, and we just started chatting. And he had an outstanding resume. So Tao Tao actually went through a lot in his career. He was also, I think, he really came into Europe first as basically head of Europe for Huawei Technologies. Did a lot of stuff there. He knows how to start, really bring technology to a place and start from zero. And then subsequently, he did that whole process all over again for Ant Group. If I recall, I think it was with Alipay specifically, and of course more after that. So, Tao Tao, perhaps you can share more about your background and how you get to where you are today.
Yeah, absolutely, Ronkai. It's my pleasure. Thank you very much. I think I hope I'm good enough and for all you have described. So, for the reason born in China, computer science major. So joined Microsoft in very early days, and that was analog time. So then I got the opportunity to transfer from China and supporting the European businesses. Came to the UK in 2004, sort of helping Huawei to develop the businesses for the hardware, software, and the services and consultancy afterwards, and across the the EMEA region, so based in London, looks after sort of Europe and Middle East and Africa. So that time is just enabled me from like 2G, 3G, and 4G, very much traditional TMT guy, and it's a very interesting opportunity. I joined Alipay back to 2016, and so I thought the payment is quite interesting. That time was more like a fiat, okay. So we're helping the mobile operators, like BT, British Telecom, and Vodafone, and those and mobile operators, and to design the payment strategy. The sort of like a pay monthly, which is called a post pay, and also the prepay, which is instant payment. So that's very, sort of dark age. And so since that time, I, sort of encrypt the capabilities, of the B staff, P&L management, team management as well, particularly the cost culture. So, how to manage the business, across different standard nationalities, and, enable me from I'll call myself as operator, sort of my first half of my career. So later on, I joined Alipay, was again helping the businesses to grow from a fantastic, Asia-based, customer base. I think it's over 1 billion customers at that time, to develop the banking relationships and payment institutions and the fintech partnerships, along with the merger and acquisition as well. So that is again, quite interesting. That time I'm kind of, helping the fintech e-wallet and to build an ecosystem, set up the Alipay, and also launched Alipay within the certified market in the EMEA region. So that's my payment and fintech time. And so after Alipay, I joined an asset manager, which is Ashmore Group, and managing about $100 billion and is global emerging market and specialist. So I kind of converted myself from an operator to investor. So after Ashmore, I sort of set up our VC, which is early stage and fintech investor, focusing on three strategies. One is the payment or future of payment. Second is AI in the verticals, and the third one is health tech and with I'll say make a more healthy for the future for the human being. So that's kind of a three strategy. For the investment perspective, I think I was, angel investor since 2016, and to date, we captured about 2 unicorns. One is Revolut, returning about 100x. Second one is called X Transfer. It's a global cross-border payment company, and returning about a 30x. I'm not as good as crypto coins, okay? So let me pause here. I think I've been just talk too much.
No, thank you so much for sharing really your background and basically your journey through basically just working in the tech scene and then eventually reaching a position of seniority and then moving into investments. I think especially in the early days where you mentioned, I think especially from a portfolio, Revolut, X Transfers, I think those are big names that I'm sure many people are familiar with. I think while we're on this topic, I thought it would be interesting for you to perhaps also share your journey a little bit, like how do you transit from one to the other, and sort of what was the opportunity that sort of made you say that, okay, I'm going to do this, even though I may have never do it completely before. It might be adjacent, it might be maybe a bigger leap, but what was the thought process that went through your mind? Because at each stage, let me refresh for everyone as well. Initially you were with Huawei, 3G, 4G, and all that kind of stuff.
Mm-hmm.
And then when you jump to Alipay, it's payments. It's technically a different thing. And then you jump into investments and you're looking into Revolut, X Transfers, and various. You probably have a dozen different projects which you invested in. I think at each stage the skill sets are very different. And what makes you switch?
Yeah, it's a great question, Kai. I think I was sort of like the business head within the large global enterprise. You've got a solution, you've got some business model, and then you need to shape it and customize it into a new market and a new business partners and new clients, and you need to build a new ecosystem. So that's what I think the operator life and with the explosive growth and track records behind it are the two kind of the bullet point I'm often mentioned. But what make my choice more interesting, I think the drivers are when I saw those innovative and startups, in particular the fintech startups and payment ones and open banking or the new banks, and I feel it's really cool. I've experienced the ups and downs and in the past. I've got lots of learnings, and we made mistakes. We learned from the mistakes as well. I think by investing, some of the money into those early stage startups, and I could actually apply the added value. Number one is sort of like a board level and strategy and strategic decision making, and also help them to sort of achieve like the governance as well. I mean, in essence, help them to relevantly make a better decision and also avoid mistakes or as much as possible. So that's one. And second, by helping the multiple businesses to to invest on them, adding advice on them, and also help them to link to some potential partners or potential clients, and that makes them sort of grow into a right track, yeah, and also helps them to expedite their growth journey. So that makes my life really interesting. I mean, in the meantime, if you happen to invest into a super, founder or super founder team, and you also got, super return. So it's probably both. You have your sense of success of, working, helping, or investing into a super team. And another side, you also make financial return, for yourself and for your LPs.
Oh, that's a great answer. Thank you so much, Tao Tao. I think you actually went into basically like great companies that you sort of look into, and basically how you get into investments as well. I think your experience in investments has been it's been a number of years since you're looking into it. In your opinion, uh, are as I understand it, obviously you don't just invest in one single vertical. You invest quite across a wide variety of different industries, different things that they are doing, and very often a lot of those industries it's not what you yourself went through. So of course it's new to you. What makes a great investable company? I think you sort of touched a little bit on it about the people, about the tech. I was wondering if you can share more about your viewpoint from there, and sort of combine it with your experiences in your investments.
Yeah, absolutely, okay. Since we are early stage, you always invest into people. So I have a number of bullet points in my mind. I mean, I have our sort of scorecard to tick the box and score relevant, each aspects, scoring, and then we make collective, a quantitative and decision making. So I mean, number one is team. It's team and the market fit. I mean, the founders, need to be earned, credible insights in this area. And need to know the risk, know the operation, because we are in a compliance regulated sector, so you need to know this industry, know this sector, know the business really well, know the ecosystem, know the compliance regulators really well, and the pain point they have experienced, or their customer, or their, I would say, the team or their competitor has experienced, and they know well enough of the pain. And on top of that, the founders team must have the unfair advantage. I call it unfair advantage because other people may not have this knowledge, may not experience those pain points, not actually, went through the whole journey. So that's unfair advantage. I will say team, market fit, and plus unfair advantage. At the second time, the market need to be big enough. I mean, in a specific problem and a use case, fit it's into this particular area, and it was at least a 10 times better solution, and to grow into a much bigger market, and it can expand into, I mean, a few countries, or at least a territory, and to make them to be a leader in this niche area. Third one, I mean, wants to have a team, wants to have a pretty cool solution to fit the market need, and also to solve the pain for the customers. You need to have your distribution channel. So what will be your distribution advantage? And do you have like embedded channels or regulated partnerships and or network effects that are going to actually help you to convert many customers in a very short sales cycle? So that's kind of the top 3 bullet points when we start to look at a business in any area. So I pause here, okay. Justin, you have any questions?
No, you've been sharing really good insights into this. I think it sort of ties in, I guess, a lot with your experience when you of course previously you were also working for big multinational companies, bring technologies from China, of course, to Europe, and then you kind of have to start from scratch, right? And when you're starting from scratch, effectively, were you working almost like you yourself, you're a startup? And then you have to go through all of this, and it sort of informs your decision when you make investments.
Yeah, indeed. I mean, I think I was kind of like an entrepreneur, but my situation was a little lucky or fortunate compared with the startup. So, you have like a bigger name behind it. You have like a quite strong R&D or tech, people behind it. And also you have the cash behind. So I think I was extremely lucky compared with the startups, we are, we're investing. So if I put myself into startup, the most important thing is number one, find the right market fit and assemble a very, very like-minded and complementary team and to go to the same direction and cook a solution or nearly, ready solution. Get the first check from your client and replicate, the journey. So that's, I would say, what I'm going to do if I put myself into a startup's shoes.
Thank you so much. I think you have so many experiences in terms of investments, and of course you came from large multinational companies as well. What's your view? I think on the market in general, and by market, I think I'm trying to leave it a little bit more open. I think both the stock market and the crypto market. I know Reactive Network, we are a blockchain project, and the crypto market is kind of a subset. But I think right now we are seeing more activities in this space, right? And altcoins are really reviving. But I do feel like compared to maybe a decade ago, we're no longer sort of doing things on our own. The blockchain market is very much affected by whatever's happening in the broad market in general. What's your current view, like just on the pulse and your gut feeling sometimes?
Yeah, absolutely. I think now is a very interesting moment of time. If you look at the macro, you've got lots of tailwind. I say number one, regulatory clarity is very much improving and very much welcoming. Led by the US, GENIUS, Act, and also the stablecoin, regulation from Hong Kong. So just by the way, Ronkai, I just want to add one point. In my master degrees and essay, I wrote a topic where stablecoin adoption and CBDC will drive mass market adoption in the the crypto world, and that was my prediction. Many years ago, and now it's looking like we are. Steadily, paving and towards to that direction. So, I mean, it's quite interesting. So,
Definitely.
yeah, absolutely. So, you can see in the legalization of crypto assets and, how you regulate and, the crypto assets and, how you protect the consumers and how you actually make sure the compliance in anti-money laundering and also those, counter, terrorism and finance, make sure this kind of a cycle and from, a end to the other end, that is fully regulated, and also compliance is very important and it's very much happening. And with the the US lead and plus some few Asian countries, I mean Singapore is very much placing a very, very nice spearhead in a position in terms of leading the regulatory perspective on that. And that's one. And the second, if you look at the cash, the cash matters. I mean, the US, Fed, start to drop the rate. I mean, from last year, and look at today's, the CPI is positive, right? And towards to the next, the rate decision meeting, most likely it will be a rate cut. So that's going to generate more liquidity, in the capital market, and the cash liquidity. Amount of liquidity available in the market, that will be a second driver and to push, alternative assets, risky assets, value. I mean, if you look at SP, it's historical high, and if you look at gold, historical high. That some crypto assets still got I would say the tailwind, and that's number two. And then number three, the tech maturity is pretty much there. I mean, if you look at, institutional level of, buying or holding or custody of the crypto assets, the MPC, HSM, those, kind of technology are pretty much ready. So it's very much institutional friendly. So tech, from enterprise level, from security, out the safety perspective, is pretty much that. So I think the third point is when the institutional player, investor, joining this game, I will say that will drive the price up, and that will be a continued journey, and the inflow will push the price up. I think going to be a strong tailwind compared with the retail push. That's kind of like the 3 bullet points I'm taking.
Thank you so much. I think especially this cycle with institutions coming in volumes that's completely different from past cycles. I think that is where it gets very tricky. I think for people in this space, we're very used to, I think especially for those who have been around since 2015, for example, we always talk about the 4-year blockchain cycle, kind of course driven by Bitcoin's halving, and you kind of could see that bull market, bear market dynamics being driven by it, and we still saw it in the previous cycle in 2020, end of 2021, early 2022. There was like the peak of the bull market, and then we had a very long winter where everything dropped a lot in this space, and the revival usually again is driven by the Bitcoin halving, and that cycle every 4 years. If you've been in this space for a while, you kind of could predict. You can never predict the high and the top or the bottom, but you could kind of see that okay, there is this general trend. What do you think about institutions coming in? Do you think that they are going to mess up this trend, or do you think that there will still be this trend? It will still be relatively 4 years, or do you think that effectively this could be kind of the last cycle? After that is kind of completely new.
That's a great point, Yongkai. I think once you get a regulation, clarity, and you get a legalization, sort of cover interpretation behind it, and you have a technology maturity and a plus operational system, pretty much there. I think the institutional player and they join, that will be steady money. It will not be like a rush to buy or rush to sell. And so the inflow from institution will make the price go up, and it will be steady, grow up. And then the price down will not be that, rushed. I mean, sort of a harsh price cut like before. My taking, yeah. And once you have the, 2 or 3 things, I mean, we are pretty much closely monitoring. One is, the payment, particularly in the stablecoin, cross-border payment, the treasury automation part, with the compliance tooling on this, embedded credit, that is, I will say, it will be very sticky into the institutional and this enterprise level, and make this game very much a robust ecosystem, and make this quite, I would say, longevity. That's one. Second, the real world, sort of assets, RWA, and once you have this, infrastructure build it, and then you will see it's quite it's quite interesting. You will see the tokenized market, for particular like money market fund, and you have achieved a few kind of advantage compared with the fiat world. So those will make the game more, I will say, diversified, and once infrastructure is built, and it will be be there. People already see top asset manager BlackRock and or Fidelity, few other people that actually are launching this tokenized fund. They can achieve like instant reconciliation, and real-time, net asset value calculation. So there's lots of advantage behind it, and the cost is a lot cheaper than the traditional fiat, world. So I see once more institutional player joining, the gain will be sticky. Number one. Number two, the price will be, growing steadily. And number three, the rush to sell, rush to buy, activity will be reduced. It's going to be more institutional, decision making. It will be slower. It will be steady. That's my taking.
Thank you so much. I think that's also where it's very exciting for people in this space. Definitely, I think compared to even a year ago, the inflows are coming, and it's not. Right now it's probably largely driven by institutions, but that's also where institutions they behave differently from retail in previous cycles. I think institutions when they buy crypto assets, they are not going to buy a large basket of crypto assets. They're likely very limited because of regulations, rules, risk appetites, etc. They will buy Bitcoin. They will buy those that are highly trusted, almost blue chip, basically blue chip in this space. So I'm really looking at Ethereum, for example. And there's very few that's actually at that level, because I think for institutions that really come in and buy a digital asset, they will find those that it's not just try and test it, but from a regulatory standpoint, they are trusted because of certain key points. And I think Bitcoin and Ethereum have something that a lot of other projects in the top 20 do not have, which is they are, decentralized. Which means that there's no other party who can kind of come in and mess the whole thing up. And I think where I'm coming with this is that, Tao Tao, what's your view, I think, in terms of this, with this trend from the investment side of the thing, how do you think this will drive the kind of behavior in the crypto market, probably for the next half a year to a year?
Okay, and that's a great point. I think I can't represent other institutional investor, but you have rightly touched the point. So those institutions, because they are compliance regulation check are quite strict, and they can only invest the top pick of the crypto assets. I mean, most likely the ETF enabled the assets, right? As you can imagine, that's kind of going to be the key directions. Now the Bitcoins are over 120k at the moment, and whether Ethereum is going to be the next one and to achieve the next wave of the price appreciation is very good question, and lots of people actually are keep very close look on that, including us as well, because we believe Ethereum actually has achieved, although park the challenges aside, but Ethereum has actually achieved the most I would say sort of a well-defined and usage of all the things we just mentioned, right? I mean, we talk about a stablecoin, talk about a cross-border, we talk about RWA, we talk about those custody, all these kind of things actually are built upon the we haven't even touched the DeFi, and as well. So these are pretty much built on the Ethereum ecosystem. So this is pretty much the most, I would say, institutional friendly and regulator friendly and the compliance friendly I would say ecosystem. So I think as time passes by, the answer it will be there. I mean, it's in a matter of time, right? And it's a matter of liquidity we talk about, the macro potential, the risk and other things. So I think probably next big bet is Ethereum from a coin perspective. But if you bring back up a VC perspective, we are firmly actually or very closely looking at two directions within the crypto Web3 space. Number one is payment grade stablecoin rails and on-off ramps in specific payment corridor, because you may have like a Stripe acquired a bridge and for like a few billions, and everyone actually are doing the stablecoin cross-border overnight. Yeah, in the public you can find tons of the the player and doing the similar thing. But our focus is very much focused on three things. Number one, we like to focus in a specific corridor, the corridor with backed the transactional volume, such as the trade finance, import, export. I mean, you can see the US tariff is pretty much finishing. I mean, just that China was extended last night between Trump and the Chinese president. The China-centric exporting, trade flow will be expanded to China adjacent countries, such as China, going to India, going to Malaysia, Indonesia, Vietnam. Those countries, they will still manufacture and ship products from east to the west or to Middle East to Africa. And the capital flow will be reversed, from the west into the east. And I would say this could be a very interesting corridor for us to focus. And then once you build your payment orchestration and instant low latency settlement with a tight FX and good SLA behind it, and then it will be complying first, KYC, AML, OPAS, and those stuff on the basis. On the top of it, you may have the programmable treasury, escrow, and with conversion flows, and to reduce the customer acquisition or serviceable price. And so this kind for the payment, I would say orchestrator, are the business we are very much, like to invest or work with. That's number one. Number two, institutional crypto infrastructure. I keep mentioning that, with the MPC or hardware-backed custody, those are pretty much available, and you need to have the really good user experience and with privacy, with compliance and reliable, I would say, features behind it. So those will be very much sought after for the banks and the asset manager. So those are going to be the second part, I will say, the crypto infrastructure, but give that solution to the existing fiat FI financial institutions. They are banks, they're payment institution, and they are the asset managers. So these are the two kind of convictions, we are very much like to, to focus with.
Definitely. I think that you really do cover a very important point, which is institutions. Well, because regulatory needs and all that, they'll go for the safest, yes, but also basically things that they can even interact with. And at least for this cycle, it seems to be that Ethereum meets all the things. And that means within Ethereum, a lot of this institutional projects to do with payments and infrastructure, etc., they are going to get a lot of attention. I think infrastructure is definitely something that Reactive, I think we ourselves are infrastructure, and that's something that we sort of looked at, and we look across the horizon. And part of the reason why we built using Solidity, EVMs and all that is because we saw that like this is the future. And back then, a lot of people in 2023, 2024 felt that, no, wait a minute, like Ethereum is not doing very well token price wise. But we were looking actually beyond the token price. We were looking at not just technologies, not just teams behind it. Ethereum Foundation still have a lot of talent, and EVMs has a lot of talent as well. But we were also looking at basically if institutions are really going to come in, where will they realistically turn up in? And this is where we were, and this is where we are today. I think Reactive basically made a decision that kind of we are starting to see it pay out right now. We're really only at the start of the journey. And I think to match what you were saying, I think in terms of the tech in this space as well, we want to do something that allows institutions, businesses, projects to sort of really operate better. If you want to have a business, you want to have an app, an idea, you want to make it work on chain, you can find us because our solutions enable you to do that, and not just do that easily, but do it without a third party having to always come in and solve it for you. You can do it on your own. I think on this point as well, I thought, what's your opinion? I think in terms of how the technology is likely going to change. Of course, things change very quickly, but what do you see in the next couple of years? I think especially in terms of payments, and what do you think gets VCs and investors excited and institutions excited in the blockchain space?
Yeah, absolutely. Okay, that's a really good point. I think I want to echo that. I think, we like reactive, networks and, the team, you and the core, members as well. And the things you do, it's hugely, we believe, it will be scalable. And also you're building your own ecosystem and on the Ethereum main chain, that is something phenomenal. So keep up the great work. So that's, the first, point I want to echo what you just said. And to answer your question was regarding to what I see. I mean, it will be very much, hybrid. What's, really hot topic, which is AI, fintech and blockchain. I mean, agentic, workflow in cross pretty much from like the fraud collection, onboarding, and making some decision co-pilot for, risk management, operations, and some like, process routine-based, routine work. Yeah. Then once we have the blockchain and the AI and plus the payment, we like that part. Is pretty much that you could do a lot of things more efficiently, cheaply, but however you actually can do a much better result compared with like 12 or 18 months ago. So we see this is a huge boost of the, your service cost, your customer, acquisition cost, and also your a lower end testing or lower end development cost. So that's the kind of a multiply of, the technology advantage in terms of the blockchain and the plus the AI. And then once we have this, the ecosystems, ready, I would say there were many investable, direction in this, because if you go into any crypto or I would say AI, themed forum or event, they will give you many many I would say investable directions. But from our perspective, we are pretty much focused on one is payment, which is my core blood. Second is in institutional infrastructure, which is also I deeply involved as well. So going to be our two kind of a focus. Sorry, I hope I didn't disappoint you for my answer, Ronkai.
No, definitely. I think you actually raised a very good point. I think you definitely cover something that wasn't in my expectation, but I think it is in a very good way, because you mentioned Agentic AI, etc. I think for many people in this space, and especially in the past 1 year, Web3 AI kind of had a bit of outperformance. But if you actually go in and try them out, you realize that a vast majority of Web3 AI isn't exactly Web3, isn't exactly Agentic AI. It was a lot of using AI almost like an LLM or a chatbot and so on. But I think Agentic AI especially is coming into this space. And I myself are very excited. I think a little bit of alpha for whoever's listening as well, that we recently have a couple, it's not just one, but a couple of projects who are doing AI businesses, and they're using Reactive to do that. We got them through our debt funding. We haven't announced anything about them too much yet. Obviously, it makes more sense when they are launched. But I think that's something where I myself are seeing it firsthand, how Agentic AI are transforming the space vastly. I think we've moved a lot in this space from a technology standpoint. From 2020, where I first entered this space, we were still doing basically D5, human-enabled actions. Human just press certain things, give the approvals, things happen. And eventually we move into basically kind of intent-centric driven movements where, for example, projects like 1inch, you have an intention, you want to swap certain things, but it finds the pathway for you. That is not AI, that is still largely driven by algorithms, computations behind the scenes. And then we reach a few more years into what I call a bit of a generative AI space in past 1 or 2 years, where it's focused a lot of using AI that's off-chain to create new content, text, images, etc. That's happening within our space. But it doesn't solve the initial part, which is what intent-centric driven pathways are trying to do. And then now I'm seeing Agentic AI for the first time coming in and reaching a sort of maturation to enable some of these things beyond what is possible previously with just algorithm. Now we're using pretty smart Agentic AI to say that kind of this is my intention, this is what I'm trying to achieve, these are my parameters, what can be done? And it is very exciting. I think to me the holy grail is really just, for example, give an agent $1,000 and they turn it into $10,000 for you. They determine the pathways, they determine all sorts of different ways to play with it. You tell them, this is my risk appetite, this is how much I'm willing to lose. Can you turn 1,000 to 10,000? To me is a holy grail. Of course, it might go beyond, but I am actually quite hopeful that day is coming. And that actually, Tao Tao, I think what do you think? I think Agentic AI, of course, is way beyond that as well. And I'm just looking at it from the crypto perspective. But I was wondering as well, perhaps you can share a little bit of the non-crypto perspective. What are the possibilities that's happening out there right now? And from there, is there something that we can probably bring into our space?
Yeah, absolutely. I think, I quite agree with you. A genetic, AI is helping multi-stream activity more efficient and effective. In the past, maybe we just try with like an image or building just a trial video, and now very seriously doing some part of the actual work. So from our perspective, we are thinking probably at least 30 to 40% of the routine-based efforts are done by the AI within a controlled, I think, not in the public, LLM, is in a private, LLM. That's one. And two, to answer your point, what is outside of the, the Web3? I think in the fiat world, in the traditional world, AI has been a very, very sort of like a huge tailwind in the traditional, market. I have seen there were multi-directional, I'll say, the investable area because of the AI. Let's start with infrastructure, because my background is coming from the, infrastructure and building the telecommunication systems. You can see the number of the data centers and the number of data center output is actually growing phenomenal. And the data center, two biggest data center, I would say the REITs, owner, made in the US. One is Digital Reality, and the other one is Equinix, and they are very much, hitting the historical high. And the data center in the, Western Europe, Ireland, UK, Germany, those big countries are just not enough. All the data center is a full capacity, and then you need to actually build in a new data center which is AI friendly, and the GPU is more suitable for the AI computation and it costs less energy. So then you will have the second part. All the energy actually are sort of generated, and whether enough, and what, as time passes by, the sustainable energy, the green energy, they are coming. They are actually coming to a more and more efficient. I mean, not only for the the cost perspective, but also more ESG friendly. So that is, I think, the second trend. The green, usable, sustainable energy will come in and actually helping the data center to power the data center, to power the, those, crypto minings. That's the, the infrastructure related. And you will have a few, I would say, like a water cooling technologies and super, capacity for the power. I mean, you even have like a nuclear power for the data center in this world. So that's the one part. I mean, I don't want to, waste, too much time because go too deep. And the second part, in a VR world, you can see the data infrastructure, because all the good quality data are going to give you the opportunity to do the data exercises, and then you will be able to do the AI algorithms, and you can come out with a good result. But to date, the good quality data are very limited. A lot of long-term industry, very historical industry, such as oil gas, such as the law firm, such as in the government. I mean, many kind of the sectors, the data quality are terrible. Is unstructured data. And I think, the data engineering, data cleaning are very important. And that's why, you can see many, AI winner, such Alexander Wang, his company actually just helping OpenAI to do the data cleaning, and the business is how many billions, I can't remember. So those businesses, helping the traditional industry player to digitally transform unstructured data into the structural good quality data are the winner in the second part, right? And then the third one, I mean, we were talking about, the AI fintech can help you to do compliance fraud check. And this is very much, not a new thing to me now. But I feel the third thing, if I got capacity to look into it, will be the cybersecurity and, the network safety and the regulation for the data protection, privacy, and those kind of area will be probably the third kind of I would say theme we like to look at. A data, cybersecurity, just like insurance you buy. And if you don't actually, sharpen your arm, and then, your crypto assets and your precious, client data, and it will be at risk. So that's going to be, I think, the three stream, which is outside of the Web3, but we are also interested with.
Oh, definitely. I think the entire trends of the market is really moving, or where all of these are getting to be extremely important. I think both inside and outside of Web3 in general. I think especially cybersecurity. I think, for example, I think quantum computing has always been cited as a potential threat, not just for Web3, but it's like Web2 as well, of course. But I think in the context of Web3, quantum computing can potentially really just, for example, break Bitcoin. Because if you can compute way better than everyone else, you can mess around with it, right? By being always the one to validate the next block. And that is a risk that I think in Web3, for example, is already looking at. And it's a game of not just being faster than them, but it's also how do we prevent certain part of this risk from even happening. It's a lot of scenario testings, etc. And of course, I myself, being an in X security side of the house, I'm always interested to just know what's going on. I think this is a space where there's too much money at stake. And because of that, there will be a lot of money to be made from like securing this. Companies are moving from, this is a cost problem. Like every time you spend on security, you feel like you're just spending money without getting anything. But the mindset is shifting very rapidly to not just like, it's no longer a cost thing. It's actually an essential part of running a business. And they will pay top dollar top dollar to make sure that everything works. And from the I think retail perspective, you will also pay for services if you are assured that the security behind it is great.
Yeah, absolutely. So it's retail side is pretty much a vulnerable sector, and the retail, I think, if there's a solution and it can give them certain of the, I would say, evidence guarantee or certain kind of the comfort and the trust helps them to to cover or kind of against the basic attack and kind of steal of the the wallet, the private key. And that will be very interesting to my perspective. I mean, I was seeing some like insurance and company provide, in a crypto web, but as insurance, need to be based upon a solution, right? So I will probably more focus on a solution to help the vulnerable and, retail customer to, protect, their crypto assets. So this is something I think could be really interesting.
Definitely. And I think just for the sake of our listeners, give them more alpha in some sense that I think all of this are something that we from the strategic point of view, we think that it's actually extremely important for retail to come into this space, for users to come into this space, and actually they just feel safe that they're not going to get hacked, they're not going to suffer any problems, they're not going to lose their money. If they make a wrong investment and they lose their money, I think most people can accept that. But if they click the wrong link and they lose their money, they're going to be very upset. And I think that's something that increasingly is a big hurdle for Web3 to become more acceptable in terms of transactions, in terms of fund security, etc. And I see it as something that a reactive network can be in a position to really facilitate that, like help protect certain things. There's reactive, the reactor, which we've been promoting for a while, but I think we're going to have more things happening over there with partnering with the developer of that, just to make things easier for retail side to come in and try it out. I think it eventually will reach a stage where reactive network will be the space where we make things happen. First for retail and businesses, eventually even for institutions, for them to come in and say that, yeah, I'm not going to get into trouble, I'm not going to lose my clients' assets when I deal with this space. And I think by being Ethereum adjacent, I think we're in a very, very good position to sort of be in a space where eventually, right at the highest level, institutions are comfortable with the technology. I do know that we have 5 minutes left, and I think Tao Tao, I thought we can. It will be a really nice end to this sharing if you can share with us. Basically, I wouldn't call it a prediction. Like no one can predict anything, but what's your take? What's your take in terms of looking at everything? So tariffs, what's happening in Europe, what's happening in Asia, what's happening in the projects you are investing in. What do you think? You already spoke about the tailwinds. What are the headwinds that's likely going to come our way, and we need to be careful? And if everything seems to be okay, what are the opportunities in whether it's outside of Web3, which is your expertise, or even within Web3, beyond what you covered earlier? You mentioned about AI, but those things could take a while yet. So what's something that you would like to share with us?
Yeah, I think you mentioned tariff. Tariff is a really tough question. One side, tariff actually will drive inflation up. I mean, globally, not just the one country in the US. It's globally. The cost of trade, it actually will go up. So it will inevitably push the price up. That's one side. But on the other side, Trump is actually doing whatever he could to drop the base rate, and even force the chairman of the Fed and to reduce the interest rate. I see this is a little bit on the two direction, right? But Trump is Trump. He has his own economics policy. Nobody can interpret, right? So I see this is quite risky to my perspective, right? So the market will only go one direction. I mean, but if they don't see the, the certainty, or don't see kind of the comfort, I mean, they will just sell, right? I will dump, or probably lock, the profit they made in of a Magnificent Seven, right? Or lock in profit they made in crypto. So I think it's very uncertain, to my perspective. I don't have answer on kind. It's probably only the economics could answer that question, and nobody knows. But I would suggest everybody to clearly or closely monitoring, what's going on in terms of those, key financial economics, index, and to see how things going on. Then they're going to guide you with your next step decisions. That's one. And the second one, AI. In my view, AI, since 2022, ChatGPT launched, and has driven up the market cap of the whole US stock market cap, $25 trillion. Is that fair to drive that much capital appreciation? Honestly, I don't know. I'll give you another example. And we invested in Anthropic, which is a secondary share investment in the less than 1 year's time, but now give me about 10 times return. This is really unusual. I mean, I feel I kind of come into investing into a coin, or something like very, risky assets. But this is not risky. It's a very established businesses, and it's generating from nearly $1 trillion revenue to almost like a 10 trillion. Apologies, it's $1 billion revenue to $10 billion revenue. So it's not like risky assets, but even though the asset, the share price, in the primary market, has gone up 10 times, I think I want to be very cautious of, next investment, and particularly, want to, get, these key index, those key KPIs right. So I think, it's probably not a bad thing to hold some cash and to see what's going on. That's my point. I could be massively wrong, but I think, only, time will tell us, tell us the truth.
Oh, it's always good advice to, always have some spare ammunition, just in case. When the market is going down, your portfolio is really red, but you have some spare cash, that's where the discount starts, isn't it? So,
yeah, indeed.
Yeah. Thank you so much. Anyway, I know we've generally reached the hour. So thank you for joining today's sharing session. I think we really just want to share really experts from coming from a different background, different perspective, who are really experts in their space. And you really shared a lot of your insights into the broader market, into crypto, into tech, into startups, and so on. So I highly encourage anyone who's still with us. You might have joined in the middle. You might not have heard those at the beginning. Do in your free time listen to what we have discussed. And if anything, there's been a lot of insights into the tailwinds and the headwinds of this market, and hopefully, well, you can do better in this market as well. So thank you all so much for joining in, and thank you, Tao Tao, for your time.
Yeah, thank you, Ron Kai. Thanks everyone for your attention, and wish you best of luck for your crypto investment and the non-crypto investment as well. All the best, guys.
Thank you.